This is the final section of Module 2, and it's a wrap up of our section on cash flow, but it's also a bit of a precursor to the next module, which is Module 3, which is all about building your forecast, because building your forecast is really where you're going to dig into this and begin to drive cash flow. But in this section, we're going to talk about what are some of the pieces you're going to be doing as you make that forecast, and ways that you can add to your cash flow and multiply it in the life of your business. So here's what we're going to do is set a plan. And when you set that plan, and this is one of the most common misconceptions about financials, about accounting, about creating a forecast, is that when you do it, you're going to have so many numbers and so many things that you can look at when you create that forecast the first time that it's going to be almost meaningless to you. It's going to have little to no value. And so the misconception is that that is what a forecast is, and so if you can't figure that out, you're out of luck. Unfortunately, that's how it's communicated to a lot of business owners, but what we are advocating here is to create a forecast and a financial model that breaks out the 3 to 5 key drivers that are going to make the biggest impact for your business, for achieving your goals, and ultimately for your own cash flow. And as we talked about throughout this section, cash flow is easily the most important metric you're going to be able to look at. And so when you build that forecast, you're going to keep an eye on cash flow and be able to manipulate the numbers so that you ensure that excess cash flow is being generated in the business. And if it's not, you can make changes so that it is. So here's what we're going to do is, like I just said, set the path for driving more cash flow in the business. Start to identify those key drivers. So like Philip showed in the guide that you read earlier in this section, you want to know what's happening with the cash, what's about to happen to the cash. And when you identify what's happening, you need to see what are the causes, what are the things that are having the biggest impact on that. Because yeah, your whole business contributes to whether or not excess cash is being generated or not, but then you need to drill down and determine what are those key causes that are making the biggest impact. And what we're going to talk about here is what would it take to generate excess cash flow? Not just keep it, but to generate more and to expand and to do more in the business, because we're starting to generate excess cash flow so we can get the things that we want. So here's a term that I know everybody's familiar with, but I want to really emphasize it here because I think it needs to be the way to look at everything in your business and to start asking the question, what's the ROI? Because I think too often as entrepreneurs, we make decisions and we have no real way to evaluate whether or not this decision was good or not. We go kind of by feel, by gut. Did it feel good? Did it go well? Instead, we need to have metrics tied to everything, and to have everything come down to an ROI. And so every dollar you spend, and this is an important way, kind of reframe mentally in your business, every dollar you spend is an investment. It's not spending, it's investing. Because like we've been showing throughout this course, cash flow is king. It's everything, and it's your ability to breathe and live and to do things, to sustain and to create value in the world. And so when you're spending dollars, those are dollars that are not going somewhere else. They're not going to an employee. They're not going home to you and your family. They're not going back into the business. And so wherever those dollars go, we need to really have an eye on whether or not we're getting a return on that investment. Because if we spend the dollars and don't get a return, we need to stop that as soon as possible, because there's plenty of things that do need attention, that do need cash, that we can use that make more sense. And so the ROI is something we have to start to look at in a very intense way. And when we review expenses, we need to take a critical eye and understand what is the point of those expenses. Another example is when you look at your staff and your team, and looking at it through the lens of an ROI. And so what can happen the way I just explained this about investing your money and not just spending it, is what I'm not advocating for is to become really, really tight. because that's how that can kind of sound. Is like, well, I've got to be incredibly like thinking hard about every dollar I spend and making sure I don't ever make a bad expense or something that doesn't make sense. Uh, when you start to think that way, now you're not thinking in a growth mindset. And so that's why the term ROI is important, to look at it as an investment. And so the money you spend, it's not saying don't spend it, it's spend $1 so you can make two, or spend $1 so you make three. When you do that, that's how you grow a business. That's how you create excess cash flow. It's not to not spend it, it's to invest it in things that are meaningful. And so that's really the basis of what employees do for a business, because most businesses start with the founder who does everything. And so the hires that you bring on are to free yourself up, because there's an ROI there that finally makes sense, that I can spend a certain dollar amount so that someone takes on my bookkeeping. I can spend a certain dollar amount so that someone takes on my marketing. And they then generate, not only do they generate cash flow that replaces what I'm spending to pay them and hire them, but it also frees me up to add more value in other places, which then multiplies that investment. So here's an example. Should you hire someone for sales? A lot of people start out as the entrepreneur and they are the salesperson. A lot of entrepreneurs are great at sales, and they're probably better at selling whatever they do than whoever they would hire to replace them. So you could think, well, why would I hire a salesperson? I can just do it myself. I can save money and do a better job. But the reality is, when you start to think in an ROI, if you hire someone to replace you and it takes away all that time you're spending on it, even if they're 75% as good as you, you're making a lot of money, because now they're generating revenue without, even if you take a day off, even if you have something else to deal with. And as the business grows, you have a lot more to think about, a lot more fires to put out. And so when you start to think in terms of ROI, it makes no sense for the entrepreneur to be in a sales role. You should hire someone that can do it and generate enough sales to replace what you're paying them, and also free you up to do other things. That's a no-brainer for every business, and you can start to think that way when you start to look at the ROI. You can also have a black and white perspective on whether or not something worked. And so no more anecdotal evidence on whether something worked or not. So if you do a marketing campaign, it's not a discussion, it's really a black and white thing. Did it produce what we wanted it to produce or not? That's the key to driving cash flow, is really to look at what is working and what is not working. And then when you see that, you kill what's not working. And too many businesses have a lot of things going on that are not working, that are not generating excess cash flow, that are not generating a return on their investment. And that's because nobody's looking at them, and nobody's looking at them through a lens of return on investment to determine that. And so when you start to kill those things, you not only free up time in the business and focus the energy, but you also generate more cash flow and more profitability, because you're eliminating waste. And then you double and triple down on what's working. So as you start to refine the focus on the things that are working and kill the things that are not, you start to see an exponential impact on the results that you have, because things start to compound and it continues to grow. So going back to the last section, we talked about key questions that determine profitability. And you can kind of flip those questions around. So the first, you ask the questions to kind of help you understand what is your cost of acquiring a customer, cost of delivering, and the lifetime value. But now, when we're looking at how do we drive excess cash flow, starting to ask questions of how could we do these things better? How could we find a more efficient way of acquiring a customer? Could we create partnership program? Could we work in a joint venture with someone who has a big audience? What are some other things you can do? What in creativity can you engage that creates a more efficient way of acquiring a customer? Because if your average dollar is this and you cut that in half, that's just cash flow that comes into the business. Or can you find a more efficient way to deliver value? So you've always done it a certain way. Is there a better way to do it? If you invest in a big, bulky software system, a lot of people end up making that jump as they scale. And on the surface, it can seem like a terrible decision. But if it allows you a more efficient way to deliver value, and it takes less people and less dollars, then it's going to create more cash flow in the business. And how can we create better high value long-term relationships so that the people we work with, there's a maximized lifetime value from those relationships, because those are the easiest customers to get, as the ones that have already worked with us. You can deliver a great experience, they come back for more again and again and again, and that just is cash flow into the business. It doesn't cost money to acquire them the second time around because they already know you. And so it's really important to create a great experience for those clients, and that has a direct impact on cash flow. So that's kind of the recap or the overview on cash flow, and understanding why it is king, why it is so important in a business, and then how to know what's happening with the cash and what's about to happen, and then starting to manipulate it, how to make sure it stays in the business, how do you keep it, build up cash reserves, and then how to accelerate it, how to generate more of it and multiply your efforts. And so before we go into the next section, which will be about creating your forecast so that you can build that roadmap to your goals, I want to spend just a minute to kind of zoom out, because we've been digging into the weeds a little bit, getting into cash flow and understanding how to understand where it's at, how to grow it. And now I think is a good time to just think about the why behind your business and what you want to be. And the reason why I want to bring that up is because the decisions that you make are going to completely impact what type of business you end up creating. So who ultimately do you want to be? Because you may have a business that's producing excess cash flow, that is putting money in your pocket, it's creating happy employees, and is growing, and it has the ability to scale. But you have to decide, is that what you want? Because scaling a business for a while may lead to less cash flow, but then to more after that. And so it's really important for you to think through, do you want to be the owner of a business with 5 employees that are all happily compensated and that things are steady and cash is flowing? Or do you want to be the business of a fast growing company that ends up with 50 to 100 employees and has more volatility and more chaos? You have to understand what that is, because if you just grow for growth's sake and just continue to build on what you have, you can end up in a place that you never hoped to be in. And so we can show you how to generate more and more cash flow, but maybe that's not the answer. Maybe keeping the cash flow and staying where you are is the best for what you're trying to build. Maybe it needs to be triple, quadrupled, and continuing to accelerate that. That's all depending on the entrepreneur and what their goals are. But I want you to think about that, because a lot of people just drift along. And when you go into the forecasting section and you build that model, you need to be honest with yourself and realistic with yourself about what type of business you want to have, because you're going to have to think through that and think 12 months down the road, where do I want to be? And you don't need to just think and extrapolate from the present. You need to really think about that, because when you think about it and put yourself in those shoes of where you're going to be in 12 months, you can actually build the model to get there. And that's what we want to help you do. And so spend some time now just to reflect and think about your why, think about your purpose, think about what you want, because in the next section it's going to get real. We're going to talk about how to actually make that happen, how to make it happen with a financial model that is profitable and produces excess cash, and it's going to be exciting. So we don't want to have all that happen, and then 12 months from now it all happens and you're like, dang, this has been fun, but I was in a better place before. So let's be intentional with our goals, and let's go ahead and make those happen. Thanks for joining, and we will move on to module number 3 next.